Hey everybody, I'm Casey Stubbs. Welcome, welcome, welcome. Big shout out to David and Timing Research. Thank you so much for having me. I'm so thankful and appreciative, and I just love being here. It's always a pleasure. Thank everyone in the audience that's here. Thank you. I'm going to do my best to make sure that you guys have something actionable and something you can use that will really help you walk away from this training with something that's going to bring money into your account, right? So this is titled The Four Secrets to Lock in Weekly Cash Every Monday, right? And this is something that I use and I love it and I teach it and it works. So what you're going to learn today, I'm going to teach you four things. Four things. And the first thing I'm going to teach you is how to avoid disaster, how to trade with a high probability. That's the second thing. And then number three, how to create consistent weekly income. And then the fourth thing, which is how to trade in just out 1 hour a week. That's it. 1 hour a week. And I'm not joking. And not only, I got other things I could tell you, but not only are we going to trade an hour a week, but we're going to replace your income in an hour a week. So that means if you're making $1,000 a week at your job, we're going to replace that and we're going to make $1,000 a week in options trading. And is it going to happen instantly? Is it get rich quick? No, 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 but it will happen if you come up with a plan, you follow the plan, you manage your risk, and you make it happen. What I always like to say is the way to get rich quick is to get rich slow. And it just happens a lot faster than what you think. You start slowly, and then eventually, boom, it takes off. Now, so those are the four things. You're going to walk away with that today. So if that sounds good to everybody, just let me know in the chat if any of those things are interesting to you. I love a lot of feedback and questions in with my presentations. So the next thing is step one is avoid disaster. That's a picture of me when I first started trading. I started trading at 16 years old, and I grew my account to $30,000 by age 24. Now, one of the things that you got to realize about that is that's probably $90,000 in today's money, right? And how do I know that? Like they look at the inflation rate or whatever, they say it's 50%, 100%, but I look at it based off of cost of living and at living expenses. When I got out of the military, I was 23 years old. I had 30,000. That was so much money. But I got my first apartment and I was paying $350 in rent. Can anyone guess what year that was? $350 in monthly rent in a small, it might have even been it was definitely a one bedroom, but it might have even been a two-bedroom apartment, right? In an apartment complex. It was in Salem, Oregon. And if anyone knows anything about Oregon, that's a pretty nice area. It's growing. Salem's been a growing area for a long time. And the cost of living is not cheap there, but it's gone up. And so nowadays, just go to Salem, Oregon, right? And compare apples to apples and go look at apartments. You're looking at like $1,200 for a small one-bedroom apartment monthly. So, yeah, that's an insane amount of money that I had made buying power when I was just young, and I did it through the markets. Now, why am I saying all this to say step one is avoid disaster? I went through some incredible financial disasters, even though I started out extremely successful, right? And I'm coaching and teaching now. And whenever I get on a coaching call, I share with people, I try to get to the heart of the matter, why they're reaching out to me. And a lot of the time, it's because they've gone through disaster. And so I have to share this at the front, at the beginning of the training, because I was just talking to a guy this week. He's like, I had $1 million in my account and now it's only $150,000. I don't know about you, but that's my definition of a financial disaster in the market. And usually there's a couple things that happen to it. Number one is we're focusing on getting rich instead of a trusted system or a trusted process. And a lot of times it's greed, right? We want to get rich, fear of missing out, greed. Another part of it is not wanting to take a loss, not wanting to take a loss because taking losses are so painful. But here's me. When I was 16, I had this image of trading because my dad taught me how to trade. And I really felt like this is the brilliance of a 16-year-old. I really felt like I knew more than him and that he was just crazy. Thought his ideas were bad. And it's embarrassing now for me to even say those things out loud, but look, that's how I thought. And I was like, oh, you're not doing it right. Wait till I get into the markets. Just you wait till I get in, right? And so I took off. I was doing so well. And then evidently disaster did happen and I ended up losing everything. I made a lot of decisions. I started spending money I shouldn't have spent. I closed the trades. I stopped trading. I ended up taking all of that money out and having to start over. And look, if you have been there, that's great because you know what I'm going through. You know how painful it is. You know the sorrow of it. Look, it's only money, right? It's only money, but at the same time, it's like when I look back at where I am, I'm very successful now, so I'm not complaining. But when and I love the challenges because when you have challenges, you learn. So when you go through these things and you lose, just rejoice and be thankful because you're learning, you're getting stronger, you're getting out of your comfort zone. As long as you don't quit, as long as you don't get a bad attitude, life isn't necessarily about what happens to us, but it's how we respond. And so I recommend people jumping in, maybe making a few mistakes, but I also try to teach people not to do what I did, even though it ended up being a great thing. I don't know if any of that makes sense. I like to teach people to go slow, to take it small, to focus on a process, to not risk everything because I went through a lot of financial pain, a lot of psychological pain, a lot of self doubt and feeling that I was inferior, feeling that I was a loser, feeling that I couldn't do anything because of the massive losses that I had to experience. And you really don't have to do that. And I would never do that again because I've learned the hard way. But I'm not just going to tell you to learn the hard way. And what's awesome is I talk to different people and I say that a lot of the people I talk to, they're like, they're underwater. They've got losing trades that are never going to recover and they just won't close them because there's a small hope if anyone's ever done that. But on the other hand, there are people that are not like me at all. People that are conservative, people that are wise with their money, people that are really do their research and they do their homework before they do any strategy. I really applaud those people. I had to learn the hard way. And maybe some of you are like me, and then maybe some of you are the other ones that are very responsible. But the first thing I just want to recommend on this first slide is don't don't invest money you can't afford to lose. Be wise. Don't focus on getting rich. Focus on creating a process. And big dreams do need a solid process. That's the lesson. And I'm a big believer in dreaming big, but we need a process. Another thing about just one last little thing about investing, a lot of people jump into the markets hoping to avoid a financial pain or to get out of a financial pain. That's why they want to get rich quick, right? They want to focus on easing the pain and they treat trading like a casino. Maybe you can't pay your bills. Maybe you're not making enough money. Maybe you have family members that you need to support. There's so many different things, and yet maybe you can't afford to go on that vacation that you've been wanting to go for, and you're like, if only I could make money in the markets, right? But the problem is you're trying to solve a financial problem through gambling. And usually that will create even more pain until you finally hit rock bottom and you're learning a system. And you're like, okay, now I can do this as a system. And so process beats profit. You want to create a repeatable system. And I'm going to share you what I do. So you're not going to have to create it. You're just going to, you can create it. I want you to create it. I want you to do your thing, but learn from me. So we're gonna create a repeatable system, manage risk first and profit second. Don't focus on how much you're gonna make. I mean, you want to think about that, but you want to focus on how much you're going to risk. And you'll do that to keep your emotions out of trading. Slow and steady growth beats risky wins. And so I'm hoping that I'm talking to the two groups of people here, the people that were like me and are crazy. Any crazy people in the audience, give me a shout out. I hope I'm not the only crazy one here. I don't know about David. I don't know if he's one of the crazy ones. Maybe he is. We haven't actually had that conversation. But maybe you're this slow and steady growth person. I want to talk to both of you today, right? Because today I can help both because I have the system that I've developed through my craziness. All right. Now, so that's the step one. The simple part, I just gave you a real big warning. In financial stuff, you have to have disclaimers. We have put disclaimers on our website. So that was my disclaimer without making it being boring and a long wall of text that no one is going to read. You know, trading is risky. Da 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 da. I've literally never read that ever, and I'm required to put it on my website. And I'm like, I'm not gonna write that, so I just go find another trader and I copy it off of his website and I paste it. I have no idea what it actually says. See, guys, I'm just telling you that's kind of that's what I do. And they're like, wait, you're not options trading universe. Oh, wait, yeah, let me change that. Anyways, okay, so Step two, trade with high probability. I teach a strategy called the credit spread. Well, what is a credit spread, you might ask? Some of you guys know. They're amazing, awesome, cool. They make you a lot of money, but they're also very dangerous. But the cool thing about them is that you know your defined risk on the front end, right? You know your defined risk. That's very important, right? So right here, risk. I circled it. Let me see if I can change the color. Risk right there. Okay. We know what we're risking on the front end. So, what is a credit spread? It's when you buy an option and you sell an option at the same time. So, in order to do this, you must get approved with your broker and you have to have an options trading. So, you have to get approved, and sometimes it's a little tricky to get approved. And so, you have to answer questions the right way. So, if you don't have it, do your research beforehand and learn how to get approved so you don't answer the questions the wrong way. But really, all it is you're buying an option and you're selling an option at the same time, and you receive a credit because they're at different prices, right? And so in this example, this is what we call my ROI snapshot. It's so cool because we know what we're making, $25. We know what we're risking, 100. So in this case, you're going to get a 25% return on your investment. And the other thing about that is it's within a period of time. So it depends on how long you have your option open, a period of time. Now, what's amazing and why this is really, there's so many things that are amazing about it. But for one is 25% is great. So let's use a comparison, an apples to oranges comparison. But let's just say that we're putting this into the savings account. Give me some examples in your chat. In chat is how much money, how much interest are you guys getting in your savings account? Let me know right now. What are you guys doing? Um, what are you guys getting? Anybody? Anyone? Anyone have a savings account? I mean, I know savings accounts are old fashioned, right? Maybe you guys don't have one. I personally do have a savings account with a small amount in it for emergencies and things like that. And I know what I'm getting, but I just want to know if anyone else has one and what are you guys getting ROI wise, return on investment for 1 year on your savings account? Let me know. Okay, 4,000. Wow, that's great. You're making $4,000. Is that a day? Is that a year? I was kind of more looking at towards percentage wise, right? What's your percentage that you're getting? Anyone else percentage? Now, if you're getting 4,000 in your savings account and that's yearly, that means you probably have like $4 million in your account. I mean, that's a big old savings account. That's pretty good. But so what? Oh, point oh 0.04. Okay, point oh 0.04. That's good. Thank you, Chuck. Shout out to Chuck because he's active and paying attention. Thank you. I'm always looking for people that are paying attention. So Chuck, so let's just compare this, right? We're going to make a comparison. Point oh 0.04 versus 25. Which would you rather have? Point oh 0.04 or versus 25? Well, I think I understand what you were going to answer. You're going to say 25. Now, there's a problem though. There is a big problem, but there's some good stuff and some bad stuff. So, number one is we know our risk, it's defined. We can't go more than this, which is a huge benefit on a credit spread. I know what I'm losing when I put the money in. 100. So I will automatically say, okay, that's it. I can handle that risk. Number two, I know my gain, $25 or 25%. But here's the cool part about this. This is not 25% for a year compared to our interest, which is 0.04. This is 25% for just 45 days, right? 25% in 45 days. So then after another 45 days, you can get another 25. And then another 45, you can do it. So annually, this really, really, really stacks up. And we do it with high probability, so we win almost all the time. So that's the power of this. Whereas regular bank, you're only getting annual. This, you're getting it every 45 days, right? And now there is one secret that I need to really hit home, and that is you can lose everything if you don't manage your risk profit properly. And so losing $100 is kind of painful, especially when you're only making 25. That means you have to win four trades to make up the one loss, right? You have to win four trades to make up the one loss. That means you have to have a 75% win rate to make this a profitable strategy, which good news, I have a strategy that is hitting a much, much, much higher probability than this. And guess what? I'm going to teach it to you. That's what I'm here for, right? So let's hang in there and we're going to learn this, guys. All right. So that's the credit spread. That's what it is. So how do we do it? I'm going to share a bunch of numbers that might not mean anything to you, but just bear with me. We use probability of profit and delta. This is numbers that help you understand, and I'm going to give you an image here in a minute, what your win rate is. And so we're trying to get about 80%. We're trying to get 80%, okay? Then we're looking for trades that are 45 days out. 45, we're going for 80%, okay? And then we want to close the trades with 21 days remaining. And what does this do? Is it helps us reduce risk, and it also helps us roll the trade. So instead of holding it for 45, we're only holding it for a little over 20. And what does this do? This helps us roll our profits even faster, which helps us increase our 25% ROI to even higher levels, right? So this is another little hack. We close our trades early to reduce our risk so we don't lose the full $100, right? Even, right? So there we go. Also, this is another big risk one, and I'm going to hit this in detail later, but we only risk 5 to 10% of our account per week based off of market conditions. So this is per week. And because remember, I'm teaching you to trade once a week, and I'm teaching you to trade in an hour a week, right? Once a week in an hour. The other thing is 1 to 2% max per trade. Again, this is helping us avoid disaster, and our risk is our stop. So if we do $100, that's our stop loss. This helps us avoid disaster. So we don't have any, so that no one who attended my session is going to be crying in a couple of weeks. They're going to have their hands in between their arms like this, and they're just going to be like, if only I hadn't attended Casey's session and he caused me to lose everything. We're not going to do that because we're going to follow the risk parameters, which is 1 to 2% max risk per trade, right? Hey, I figured it all out. I figured it all out. Not that I'm smart, because I'm not. I'm just hard-headed because I've done crazy things. Okay. I've done crazy things. Okay. So here it is, guys. Here it is. This is the POP, the pop, right? You see that? 81%. We're going for that. This is the delta, right? So we're looking at delta and pop. We're going for delta that is 20 or lower, and we're looking for a pop that's 80. Now, with that being said, I can sometimes adjust it, but it doesn't require me. This is also on the SPY, which is one of the things that I trade a lot, SPY. The thing that I want you guys to realize is that I'm not really dependent upon charts too much. Because why? Because this number tells me I don't need to look at a chart because this tells me what my win rate is, 81%. And so what did I say we needed to make to be profitable? We need to make 75% if we're getting a 25% return. So that's really important to know. If we get 25%, we need to win 81. And with my strategies about closing early, about taking profit early, about not letting it go to expiration, those things increase our win rate dramatically. So actually, the win rate's going to be much, much higher than this. Okay. And so that's really all you need to know. Little other things is this is the expiration. Remember, I said we're going out 45 days. So this is 45 days out, 19th of December. This is the strike price. As long as the trade is above 640 by December 19th, you keep all your money. So where's it at right now? This is the current price, $680. I don't even need to look at a chart. So this has to go down $40 for me to lose this trade in this 44 days, right? And can it happen? Of course it can happen. It's an 80% probability. Of course it can happen. But if it does, what's the worst that can happen? Well, I can lose $100. Okay. I can lose $100. And the odds of me losing $100 are so tiny, so tiny. But if it does and I lose $100, I'm not going to lose any sleep over losing $100, right? That's the secret of credit spreads because you could risk all of your whole account on this, right? You could go a $10,000 account, right? You could make $2,500, 2,500, and your risk was be 10,000. Right? And guess what happens? Oh, it just happened to go down $40 that day. And guess what happens to your 10K? It's gone. And then you're back to crying mode. And look, how do I know? How do I know about this? Well, because I've done it. Okay. Unfortunately, and it was painful. I needed the money. I was trying to pay for some things that my family needed. And so I was in a desperate situation. I thought, wow, it's an 80% probability I'm not going to lose this trade. And guess what happened? Can anyone guess? I lost. I lost and I wasn't able to get the thing that my family needed. And I was like, my wife is like, where's that money? You know, the family needed this, right? It's great having a family and kids. I got 9 kids, by the way, and it's awesome because I love having that responsibility. And have I always done great at it? No, not always, but hey, I do my best and I'm learning. All right. So with that being said, we're keeping our risk low. This is the strike price. This is the current price. Uh, this one more thing I want to share on this. This is the credit that you receive. So it's $4.50, and then the spread is in here in between them. Okay, so this is actually only, you'll see on the next slide what it will look like once you do it. Okay, so make sure I'm doing okay here on time. I'm doing fine. All right, so here is what it would look like on the trade. So when I said it was a $100 risk, it's actually only 89. And in this case, it's a $12 profit. So let me pull up my calculator. I should have done that ahead of time. But let's see. If we risk $89, what would that be? 9 times 0.01. So that's 1% risk or 1% ROI, $89 risk times zero point 0.2. Okay, $17. So 20% return will be $17. So it's not quite 20%, it's in between. So this example is not the ideal one. I would shop around a little bit, try to get at least 25%. And if that means my pop drops a little bit, I'm okay as long as I can get the 25% return. There are other things, just look around, learn. There's other ways to get your ROI up a little bit, but I want to go try to at least get 25%. Because why? Because there's that formula. If I hit 75% and I make 25%, I know I'm going to make money long term. Okay. So this is what it looks like though, but it's nice, $89 a risk. Another thing that means is that you can do this with a smaller account. You can do it with $100. You can actually do this with $100, and I'm going to show you at the end a $100 account that I recently opened and how well I've done on it using this strategy, so you know that it actually works. But you can do it with $100. I don't recommend it. My recommended, if you want to listen and be wise, I recommend you run this strategy on a $10,000 account. And as your account goes up, I have additional strategies to try to get you all the way up to $1 million. So, yeah. Okay. So good stuff. Everybody hanging with me so far? Are you guys enjoying the presentation? Any, am I doing okay? Just want to make sure here. Okay. I'm trying to find there we go, my notes. All right. Here we go. So let's go talk about money management. So I'm recommending a $10,000 account, right? And so we're going to do $5 a week. Thank you, Chuck and John. Appreciate it. So we're looking at doing 1 hour a week, and I'm only trading 1 day a week. And so let's do $10,000 account, which is my recommended. So if we risk 500 to 1,000, we're looking to earn 1 to 2%. So the goal here would be 1% a week, right? And that's very simple, 1% a week. Now, here's a little thing about 1% a week. 1% a week seems like a joke, right? But bear with me, it's not a joke. We're risking only a small amount, right? We're risking 5% on our account. 5%, okay, to make 1%. So that's not bad. Now, the whole thing about it is if you have $100 in your account and you earn 1%, it's a $1 profit. $1 is nothing. $1 is like, look, anybody can invest 100 and make $1. It's not hard. Okay, I'm just being real here. That's not hard. But people laugh at me. They're like, that's stupid. But here's the thing that they don't realize is that is 52% annually. Okay? If you do that every week, that's $52 starting with 100. Now you have 152 at the end of a year. That's great money. That's great return. At the end, if you're doing it with 10K, that's $15,000. That means your account looks like this. And not only that, in the next year, it keeps even getting bigger. You're looking at 20,000. And if you do that, no matter where you start, you're going to have a great deal of wealth. And it's all being safe and consistent, and you're not trying to get rich quick. Come on. That's good news, right? That's good news. Okay. So, so here's the thing. We do this once a week, and you see where it says 5 to 100. I'm going to explain this in a minute, but in more detail, but it's based on the VIX. So just hang with me. I'm going to explain how that works. Also, 5 weeks is the max that I'm trading, because once I open here on week 1, by the time week 5 comes around, I want to have closed this already so that we're operating in a loop and we're always closing, and we only have 5 weeks of trades open at one time. And this will equal a max, right? And the rest of your money is actually not being utilized, right? So that'll leave a max of 25% to 50%. Okay. And you can save some of this money for stock investments. Say you want to use investments, but you got to be able to have capital available for income creation at all time. You always have to have capital available so you can keep the income flowing. If you don't, and you trade all your money, if you have 10K and you spend it all, next week you can't make a trade and your cash flow machine dries up. You don't want the cash cow to dry up, right? You don't want the chicken laying the golden eggs to stop laying eggs. So you have to keep cash available. The farmer, when he gets hungry, he's not going to eat all of his seed. Don't deploy all of your capital. Be disciplined with your money management and don't deploy it all. All right, now here's some more money management golden nuggets for you. So after 5 weeks, you will have 2,500 to 5,000. And again, that's 25% to 50% on a 10K account, which will be anywhere between 25 to 50. Never go above 50. I already told you that, but now the slide is telling you again. All right, now, with that being said, let's go ahead and go to the next slide here. Okay, so money management continues. The VIX. So if the VIX, I didn't explain it, so I got a couple minutes here. The VIX is all about volatility. So let me just write that down. Volatility. What does it mean? I really don't know. I guess it means the market's going crazy up and down, da 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 da. I don't always get and understand all these things, but I know what it does, right? And so if the VIX goes higher, if the VIX goes higher, the premiums go up. Okay. And it's usually when the market is going down. So I want to see here if I I got to do something here. I'm going to show you guys something on a whiteboard just so you guys can get the feel for this. I should have done this in prep, but I just realized it. Okay, so we're going to clear this out. So the VIX is trading at 0.15, right? So at that point, we want to deploy 25% of our capital. Okay, now, if the VIX is low, like this, it means premiums are low. What's a premium? A premium is the credit you receive on your spreads. Okay. So we want to use 25% of our account. Why? Because it's a very safe environment. It's very safe. If we do 15, which is, it's been there a while right now, and it's just been going, this market's slow and steady, you're really making your money. It's just such a beautiful place to be. And a lot of people are like, the risk is to the downside. I'm scared. I'm not placing a trade when the market's at all-time highs because what if it dips? Well, that's where what happens. The market dips, and now all of a sudden, the VIX is trading at 40. Right? The VIX is trading at 40. If you had all of your trades open here, the market takes a tumble, all of your trades equals losers. And remember, we're safe, man. 80% probability, we're cranking away. We're never losing trades. We're growing our account, and all of a sudden, everything drops and you lose all of your trades. Now, that's why we don't risk more than 25% when you're options trading. Okay? But here's the answer, and this is powerful. This is the secret that you should have come to this session for. Okay? When the VIX goes up, the premium goes up. So instead of making right here, we're making 0.25 credit. So over here, when the VIX is 40, the market tumbles, we're making now 0.50 cents. Our credits are going through the roof. The market is in chaos and we're making more money, right? So all of these losing trades, we're now getting more credit here and we're now making our money back plus bonus cash, right? Plus bonus cash. And again, this doesn't happen often. This down here, it doesn't happen often, but when it does, you want to be ready. You know when it happened? It happened this year, right? So I'm fresh off of experience seeing this happen. It happened this year and it worked beautifully, right? I was able to recover beautifully. Why? And that was in April. Remember in April, I don't know how long you guys have been following the markets, but in April, the market tumbled. It was tariffs. Everyone was afraid of the tariffs. It tumbled. And wow, we were able to recover and we were able to get a lot more credit. So this is a really great secret hack for money management if you're running credit spreads. And it's a great strategy to earn monthly income into your account without stress. It's like a paycheck, and you have a system, and it just plain works. All right, so let me clear that out. Clear drawing, and let's close that. So that's really important to understand. All right, so we never go over 50. We never, ever, ever go over 50. We don't need to. There's no need to, unless you want to get rich quick and get greedy, which we don't want to do that because I've already gone down that road and I don't recommend it for you. All right. So, next slide. All right. So, just a couple of things to hit here. I might have already mentioned it, but we're going for 45 days, 45 days out on the expiration. We close it early at 21 days, and we do that because it equals less risk. Okay. Consistent win leads to predictable returns. Early closing increases win rate, and it does a faster reinvestment, right? Because you're deploying your capital faster and you're starting the wealth snowball sooner. So, again, this is very important. All right, now step number three. Step number three. We want to do one. Now, I messed up. I messed up. It's not one trade per week, it's we trade once per week. You can do one trade per week, but I recommend breaking it up into multiple trades depending on how much is in your account. But I like to risk 1 to 2% per week. And so if it's 1%, that would equal 5 trades. 5 trades. Okay. But we're doing it once a week. So I made a little bit of a typo there. I apologize. All right. Hope so. Hopefully you guys understand that. But 1% per trade is what I'm looking for. If we do one trade a week, that would be 5%, which you can do that too. You can do that strategy. But I like to keep my risk even lower so one trade is not going to cause me stress. I don't want stress. No stress in my life, please. Defined risk. So we know about credit spreads right off the bat. We know exactly how much we're risking. Only 5% per week. And again, simplicity compounds results. I've literally taught you guys a good portion of everything you need to know right here in this strategy. It's pretty awesome. It's very simple. There's a few little things that you might need help with in executing in practice, but that's the thing is practice makes perfect. Just get in there, start doing it, get a spreadsheet, start tracking, track on a spreadsheet. It's really important to track on a spreadsheet. Don't just wing it. Don't just wing it. Okay, so here's a trade example. We're going to risk $100. The reward is anywhere from 20 to 30. And again, that depends on the VIX, and small consistent wins stack up fast. Now, one thing you want to understand here too is that this will never change even if the VIX goes up. The risk is the same. It's the reward that changes. All right. So if the VIX is high, that's good. Now, one of the things, if the VIX is high, if we're getting a $35 or $50 credit, guess what we're going to do? We're going to, instead of risking 100, we're going to risk 200, right? So again, let's just think about this. I want to hit this really good. If we make $25 on 100, but then all of a sudden we're making 50, we want to go in with at least 200 here because the reward is worth it at this point. Because now we're getting 50% profit. The reward is worth it. And it's only for like a limited time only sale. That's not going to happen often. But when it is, we want to be ready. There's a saying that is famous. I think it was, I can't remember, Warburg or something. Roth, I can't remember his name, but it's the time to make money is when there's blood in the streets, right? The time to make money is when things are crazy. Most people have no cash to make money during the craziness. When COVID hits, most people don't have the cash at hand, but the ones that are prepared, the ones that are smart, we're ready to go. And that's who you guys are going to be now after watching this. All right, so control risk, protect your freedom. right? So I want to just take a minute to share about what this means to me. I've been through a lot, and I'm just so glad that I've been through a lot. For one, is I can help you guys, but I've also experienced the success of this and the freedom that it brings. Look at my thing on the back; it says freedom. So 5% to 25 total exposure, it equals income protection and freedom, and it also equals consistent cash flow. It equals consistent cash flow, and it represents a raise. It represents being able to get a raise. I shared at the beginning about how inflation has crushed our buying power. That 30,000 that I made as a young man is worth so much more money now than it was then because of inflation, right? And so our wages have not gone up with the same as the cost of rent or the cost of houses. Our wages have not kept up. So we're making less money and it's costing more, and that equals slavery. It equals more debt. It equals pain. It equals less ability to live in retirement. It equals less ability to do the things that you want to do. And so I'm telling you all of this so that you can get a stable cash flow and you can get a raise that outpaces inflation, and you can begin to build wealth. And so I want to tell you a story about my family. Look, I have a very large family, okay? And I personally, when I say large family, I got 9 kids, right? And we travel across the United States because my family lives in the state of Oregon. I told you at the beginning, Salem, Oregon. My family's actually from Portland, but I was living in Salem, but now I live in the East Coast. And so my wife and I would drive across America every single year to visit my family. Why? Because family's important. I wanted to make sure that my kids knew all of my relatives back home, that they knew their grandparents. My grandparents were some of my greatest influence. My parents were my greatest influence, but my grandparents' impact on me was tremendous. My grandfather was a World War II veteran, and he was on a submarine, the USS Seahorse, during World War II, and he taught me so many things. My other grandfather was a veteran in the Korean War, and my grandmothers were absolutely amazing. Okay, they were brilliant. Okay, they would take me on walks. They would invest time in my life. Okay, and we can't be working all the time. We have to make, I just want to share the amount of influence that you can have on your grandchildren is absolutely phenomenal. So you don't want to take that to chance. You want to be intentional and invest in their lives, right? And if that's not a reality for you, you need to do some things to make it happen. Um, because I am not the person I am today. I would not be the person that I am without my grandparents. So it was very important for me that my kids would meet my grandparents and that they would meet my parents. And so I would drive with my wife and my kids across the country. And by the way, listen, it's not fun always driving across the country with 9 kids. It was great memories, let's put it like that. A lot of crazy times, screaming, fighting, yelling, boredom, but there was also a lot of fun because I mean it's literally 4 days in the car with kids. They didn't always like it, but now that they're a little older, they're having great memories about it. But anyways, I'm sharing all that to share is that I had been able to take these trips. They took over a month, and due to my investments and also due to my investments in stocks, my investments in other things, my investments in businesses, I was able to afford to take off of 5 weeks during the summer every year, ever since starting in like 2007, right? Every year. And so that's because of investing, right? And you guys, you got to come up with a plan so you can have the freedom. All right. So now step 4, just that was just so important to me. And that's why I love to teach this stuff. Make sure I'm doing okay on time. I got 10 minutes to go. All right. Step number four, you do 1 hour a week. Okay. So we're going to place our trades on Monday. We're going to repeat it weekly and we're going to do predictable and scalable. And so here's how we do this weekly. I like to trade the SPY or other strong tickers. I repeat it every week and I focus on probability, not prediction. I don't really look at charts much, but I do look at charts a little bit. Okay. And so I'm looking for things that have strong trends. This is the SPY, and I'm looking for strong trends with high win rates. And by the way, remember we were talking about the VIX? This was that moment right here. Okay. The VIX really spiked here. I was losing all my trades. I actually lost like 4 or 5 weeks in a row here. Okay. Now I want you guys to be really, really real here to understand this is legit real. I lost all my trades here and I was down pretty heavy, but only risking 25% of the account. But then I loaded up right here. Now, what would have happened if I loaded up and then the market did this? Well, I don't know. I would 22, I was trading this strategy here in 22 and I still did pretty good. We didn't have because the dips weren't that bad and we had some bounces, so it still worked. Now, if it was straight down like this and then a smaller and then this and then that, then I would have to adjust. But because I'm using 25%, I still have the ability to adjust. But anyways, this year I lost 4 or 5. I lost 4 or 5 in a row. And since then, we've won 28 weeks in a row. 28 weeks in a row using this strategy. Okay. It's amazing. All right. Now, I don't just trade the SPY. So you can run a scanner. You want good companies that are growing. You want lots of volume. And I should have put a slide that tells you, but you can write notes. I want you guys to write some notes down too. Um, the ones who take the best notes are the ones that win in life. I always take notes. And why? Because I don't trust my own mind. I forget more than anyone else, but I go through my notes and I'm like, wow, I just learned that. That was so good, right? Notes are a lifesaver. Okay. So here's another one that I love to trade and have made a lot of money on. This is Robinhood. Look at Robinhood. Even when it had the down period this year, it wasn't that far. But this one has been making me money this year. Robinhood. Robinhood is really solid. And so we want to get companies like that, the S&P 500, lots of volume, lots of growth, revenue growth, leadership. You want to look for companies that have strong leaders, Elon Musk, uh, people like that, Steve Jobs, right? Strong leaders, great companies. That's what we're investing in. Not We look at the charts. I want it to be way above the 200 at moving average. That's what I'm looking at. This is 200, way above the 200. This is the 50. Look, it doesn't even drop below the 10. It hasn't even dropped below the 10 in a while. See, that's a 10 EMA. It doesn't even drop below that. So, I mean, we're looking for strong companies. Just it increases your probability even more, even more. All right. Let's uh let's go through summary here. I told you I was going to teach you 4 things. Hopefully you learned them. Avoid disaster by managing risk. Stick with high probability setups. I showed you how to do that using the POP and the delta. I told you about how to earn 1% a week using credit spreads. And I told you how to trade just 1 hour a week by going in on Monday, placing your trades, run a quick scan, and boom, right? And then step number 5, enjoy your life by creating wealth. Replace your paycheck with options, one trade at a time. And now you can start this, right, as I said, I recommend 10,000, right, to start. If you do get $10,000 in your account, you could look to make about $100 a week to start, right? That's $400 a month. That's good cash flow. What can you do with $400 a month? What can you do? Well, you can do something. You can do something, a small car payment now. But I would recommend put it into the savings or reinvest it and then buy a car with cash. Don't use a payment. Buy something used. Be wise with your money, create wealth, live below your means. Don't spend it all at one time. A lot of times, the people come to me that are in such bad financial shape. I'm like, look, fix your finances. You shouldn't even be doing this, right? I want you to make money. I want you to change your life, but you got to fix your finances because if you've got a leaky bucket, what are you going to do? What are you going to do with a leaky bucket? Nothing. All right. All right. So proof that it works. This is a small account that I've been trading, starting with $100, and you can see the return here. It started in June, and this is the exact same strategy. It's safe, consistent. I wrote in there recommended capital is a 10,000, but it does work with just it does work, right? It really does. It works because I did it, and here's the proof. This is an actual account where this had happened on. So it's been very good, very good. Now, with that being said, it works. It's great, and I now want to share a free trading guide that has some details about what I just taught. I'm going to post the link out for you guys in the chat and you guys can download it absolutely free. It's a beginner's guide to understanding and trading credit spreads. And I teach exactly what you need to know. I hope you still had some notes from today, but it really covers in depth what I taught so that you can refresh yourself and help you walk through the process. It's got step by step processes. So that's a free gift for everybody that signs up. And you can get my emails because I'll be sending you emails and stuff and learn some more things about me and whatever you want to work with me later and let me coach you and things like that. But you don't have to do any of that. You can just get the free stuff, right? And apply it. I started out by getting free stuff and applying it. And I'm always talking to people and they're like, what do I need to do? What do I need to do? And I give them advice and they don't follow it. They don't do what I'm asking them to do. People don't want to do the work. So let me just tell you right now, go out, do your homework, fix your finances, do the work. It's worth it. It's worth it because you know what? Either way, it's going to be hard. Life is going to be hard either way. Whether you do the sloppy and lazy way, your life's going to be hard. Or if you take the time to do it the right way, manage your finances, manage your trading, do the research to become a great trader, do the research to learn how to master your discipline. Look, I'm not knocking anybody, but I have run into traders that have been failing traders for 20 years in a row. At some point, you got to look in the mirror and say, I got to make a change, right? I get it. You want to make money trading, but look in the mirror, make a change, do what you need to do your homework, do your research, spend the time, get help, send somebody an email, ask questions, do something. But click that link, download the free guide, and I think that's it for today. David, as always, I really appreciate your um, your opportunities that you give me to be a part of this. You're doing such a great job.
All right. Well, thank you, Casey.
Thank you.
Great presentation. Thank you for being here.
Well, thank you. I really appreciate it.